Hey everybody, Chuck Barone. It is Thursday, January the 18th, 2024. Lots of important stuff coming today. We got jobs. Couple that with retail sales yesterday, and this economy looks pretty strong. Before I get rolling though, let me turn on my timer here and also take a half a second to welcome everybody to the show. And as always, thank you guys for your support. It was fun being on the comments. There weren't many comments yesterday, but it was nice to be on, responding, and hopefully we'll get a little more of that going. It's always fun communicating with everybody. We appreciate your support. All right, so anyway, let's talk about these markets. So we knew we were going to get jobs today. Jobs came in a lot harder than we thought it was going to. You would think that would kind of dampen the spirits of this market. I think the market now coming to reality that rate cuts are probably unlikely in March, moving to price it more towards summertime. So the stock market today, I think more of a bounce. Earnings coming in decent. This rate stuff had been moving the market negatively. Today, they kind of just going to shrug that off. So the stock market surges today. You got the Dow Jones up 201 points. 37,468. You got the NASDAQ up 200 points. Nice move. 15,055. S&P up 41 points. 4780. So here they all come correcting right, all the losses of the past day or so, right back up to gains now. And this market is kind of, just seems like it's bipolar. It doesn't know whether it wants to be happy or sad, go up or down. So it's just gyrating all over the place. I think the trend seems to be up. It seems like the analysis I seem to be reading a lot of, people think the stock market's going to have a tremendous year this year. You know how I feel about that stuff. The contrarian in me always comes right to the front. And it's like, really? It's that easy, right? So, but anyway, for today at least, investors having a happy face, stock investors, bond or mutual fund investors, as the markets rally across the board too, nicely. Bond market, not so much, right? So the 10-year selling off, up 3 basis points today, 4.14% now on the 10-year. The 2-year, basically unchanged, sitting at 4.36%. So the spread narrowing down now. You're at 22 basis points. That's pretty thin margin. I think if I'm remembering correctly, the narrowest I've seen it get was 14 basis points. So it's kind of, and I'm telling you guys, when it goes back to normal, it's going to be bananas looking because the Fed's going to keep these short-term rates super low, but all the treasuries being sold are going to spike rates on the longer term. So you're going to have this yield curve looking all kind of crazy. Bond market just, it's ordinarily a safe haven, It's where people go to park money. They want it to be safe. They don't want to lose principal. Well, now the bond market's turning into a casino where bond prices gyrating all over the place now. Now, sure, you can hold a bond to maturity and make sure you collect all your principal back that way. That's not what most traders are trying to do, though. So fascinating times in these stocks and bonds, man. Dollar today, basically up, fractionally a couple basis points. 103.41 on the index, so a good strong number. Dollar still strongest of all the currencies. It's going to be fascinating to see how everybody reacts with China having this deflation coming, actually deflating already. So it's going to be interesting, the talk of the de-dollarization. Where do they go from there, right? Precious metals today, surprisingly decent day in the face of a strong dollar, with gold rallying $17.10 per ounce, now sitting at $2,022.40 for an ounce of silver, or an ounce of gold, forgive me. Silver rallies 18 cents per ounce, now sitting at $22.71 for an ounce of silver. So a nice little rally in the face of a strong dollar, good sign for gold and silver. Oil today also up $1.52 per barrel, now sitting at $74.08 for a barrel of West Texas Intermediate, getting to the higher end of the trough now. So I would guess, it's probably going to hit that, bounce back down, or maybe it breaks out above it a little bit, comes back down. We really believe gold or oil wants to be sitting between 70 and 75 per barrel. That's where it seems to be the most comfortable trading. I think that's where it's going to stay. So, and of course, still in that trough today. Bitcoin continuing its sell-off today, down $1,390 per Bitcoin, 41,231. Still a good strong number, but it looked like it was ready to blast off to the moon. We looked like we were going to see 50,000 Bitcoin any second. The correction's still going. I really think this is shaking out the weak holders. I really think that when these ETFs start really trading, there's a market for this stuff, guys, and I don't think we've seen the tops yet. As I mentioned, traders adjusting their bets on the stock and the bond market now, seeing the first Fed rate cut coming more towards summertime than in March, in the springtime. So it's going to be fascinating to see how that plays out. These guys always find a way to lose money, I guess, right? So anyway, let's talk about the news of the day, big stuff today. We knew we were going to get jobs. And that's what we got, man. Boom. Jobs super hot, coming in again, beating estimates. Claims coming in at 187,000. They were expecting 207,000. It's interesting because this job market seems to always overperform expectations. They're constantly figuring we're going to have 225, we get 198. We're going to have 207, we get 187. They just can't seem to get it right. And it always seems to be a lot stronger than than the estimates make it to be, right? So you couple this with the strong retail sales number we got yesterday. I think retail sales up over 5% last year, huge strong month in December. And now you couple it with a strong labor market, strong jobs, and it kind of creates a snapshot there that makes it look like everything's great with the economy and consumers are doing real well. Well, I beg to differ. If you dig just a little deeper, a little bit under the surface here into this picture, all of a sudden things aren't so rosy, right? So you look at savings accounts from the pandemic. People were actually saving money. Savings rate in the United States skyrocketed. People were banking those the checks they were getting from the government. And people had a lot of excess savings, no place to spend it. Well, now those pandemic savings are pretty much spent out, zeroed out. Only people with higher incomes and higher bank balances have any of those checks left. Not a good thing. Savings rates also falling. United States, I think we were up over 20% during the COVID pandemic. Now we're down to the usual 2%, 3%. Now you add on record levels of debt for consumers. Housing, car payments, student loans, credit cards, everything at record levels. Government trying to do a little bit what they can, but eliminating overdraft fees and trying to get rid of junk fees and doing what they can do to forgive some of these student loans. Still allowing credit card companies to charge more than 20% interest on a credit card, even to the highest 800 plus FICO borrower, right? Letting these people paying thousands of dollars per month, $1,000 plus car payments because they want to drive a fancy car. All those loans starting to go belly up now. They're starting with the subprime like it always does. Now you add in the prices for everything, especially the necessaries, housing, food, energy, keep on going up, and worse than that, staying up. So it's bad enough seeing these spikes in prices. But when the spike is coming from what was already a previous spike, okay, so it was $1, now it's $1.20, it's going to spike from there to $1.50. Well, they're measuring from $1.20 to $1.50, not the dollar to it anyway. You know what I'm saying, guys. It's just, it all adds up to bad news for the consumer. The consumer, the way they've set this economy up, because we want to have everything be super cheap in this country now. So they decimate manufacturing, decimate the strength of this country, turn it into the information society, the consumer society, where consumers are 80% of the friggin' economy. Now you got what does that do? Well, of course, consumers, to keep the economy rolling right along, doing their part, going into record levels of debt. But where do we go from here, guys? Do we just continue to break records for debt? Okay, we had a new record this month, but guess what? We're piling on more debt next month. We're going to break the record again. We're going to break the record every single month for new levels of debt. Is that the plan? You think that's sustainable? When do we get serious about living a life that's less reliant on future payments, man? People, the debt, I always joke around and say it's so easy to get into debt because spending money is super easy. Anybody can do that. The problem is paying that money back. And the way they've got these payments set up, the way they've got everything rigged, the lenders have every advantage. They get to charge the rates they want. They get to charge late fees. If you're 1 second late, they're going to charge you for that. Of course, let's charge the people who can least afford it, I just don't know how, all of this stuff keeps going and going and going eternally. We already all can agree that the federal government's out of control with their $34 trillion and they can't keep that going forever. What makes us think consumers can? Consumers will go up, belly up, way sooner than the government has. The government will. So why are we focusing so much on the people that can actually just print money to pay their bills? Consumers can't do that. So, anyway, guys, the picture, they want to paint a rosy picture. It's an election year, so they want everything to be wonderful and, perfect. It just isn't. So they portray these things. Now they're getting everybody prepared for rate cuts coming later in the year, or maybe not at all. And now that's the media moving to that. You got the Fed people out saying they're in no hurry to cut rates. You got the market starting to reprice when cuts are going to happen. Okay, guys, but what about everybody that set their whole portfolios up anticipating what these yo-yos said was going to happen, and now it isn't? I don't know, man. Anyway, this was another interesting thing I saw today. This is crazy, guys. Auto insurance. Have you guys noticed your car insurance going up? Mine was up 25% this year for my renewal. 25%. Auto insurance rates now sitting, get this, a 47-year high. Auto rates jumping more than 20% in just December alone. This is the 16th straight month that insurance rates have jumped higher than 10% per month. So every month, rates keep getting higher and higher and higher and higher. Utility bills, higher, higher. I just got my gas bill. I've lived in my house for 23 years. My gas bills in the winter are very consistent. Usually between $100 and $150 per month for gas to heat the house and hot water and whatever. This month, $300. So I look at the bill. My energy usage is the same. I'm using the same amount of gas. But now I get to pay twice as much for it. I don't remember the Public Utilities Commission coming in front of the public talking about doubling anybody's bill. No, when they announce these rate increases, it's the average consumer's bill will go up $2. Yeah, okay. So now you got auto insurance going through the roof. Like I was saying, the necessaries, the stuff you gotta have. You gotta have gas to heat your house. You gotta have electricity. Now you take gas and electricity, just those two simple utilities, and if you add in water here in Nevada, those utilities are higher than most people's mortgage payments used to be. And then they wonder why everybody's so unhappy. Not real hard to see, right? Also, more fun stuff for consumers. 50% of credit card holders, ordinarily more than 60% of credit card holders pay their balances off at the end of the month. Now we're down to 50%, actually more than 50% carrying balances. 56 million cardholders have been paying perpetually perpetually payment, balance not going down. 56 million people paying 20 to 25% interest every single month, can't get rid of the debt. Well, record debt always comes back as record bankruptcies. So we got that to look forward to. Anyway, that's it for the day. Sorry to be Charlie negative today. Hopefully we'll get a little bit of news tomorrow that can buoy us up a little bit. Finish the week with some positives. We'll be back tomorrow to bring you guys the news you need. If you can, guys, please hit the like button. Changes the algorithms around, gets our video out in front of a few more people. I'll be in comments today, so hit me up with your questions, comments, funnies, jokes, whatever you feel. And we'll be back tomorrow to bring you guys the news you need. Until then, guys, take care. Thanks.